right, friends, good morning. Welcome to a brand new edition of the MultiMillionaire Forum, January 2025, which is the beginning of the new year. So here's wishing everybody a fabulous new 2025, and let's hope that this year turns out to be even better than last year. Last year was, of course, like a record-breaking year of sorts, but let's hope that this year is at least same or better. But we will sort of investigate that as we sort of move along in this presentation. This is a very usual every year routine that we follow, that in January we have the opportunities for the year and what's looking good, what's looking interesting. We also present a little bit of the background of the last year and on the basis of which we are entering the new year. Then February session is always going to be on the budget because 1st Feb is the budget. So incidentally, 1st Feb is the Saturday itself this year. And Honorable Finance Minister is going to speak. So we will have to again push our session in the second week of February or the second Saturday of February. So this is just like an advance intimation. Jan and Feb agenda is more or less set. And so let's see, what's been happening. Let's study. And there's some fabulous information that we've got together this time. So just stay till the end, about 35 minutes of this session. And of course, that after that, we'll get into question and answers where you can ask anything. But for the next 30 minutes or so, I'll have a monologue of sorts. But let me put some very, very interesting data and facts before you. Right. So here my team puts up the presentation for this MMF January 2025. Just by the way, for purposes of regulation and compliance, this is only education information. We don't speak about any product. We don't give any advice on any specific stock or product. And basically, we have licenses for all the distribution of financial products. So going forward, now, what are the events that really shaped the world before us in 2024? So very quickly, I'll just cover broadly speaking, what happened around the world and what happened in India. So some key events that we saw in the world was, of course, we had the interest rate cut cycle that has started all across the world. We also saw some good performance from Chinese markets. And the American markets, both American and Chinese markets did reasonably well. So did some European markets like the German market, and then the UK and the French market were pretty mediocre, and Brazil did about zero. So we've had a mixed sort of a year for different countries around the world, but the best ones obviously were the US markets and the Chinese markets, which went up 30%. Japan and Germany went up 20%. And as you can see, amongst the significant ones, UK and France was about 9 and 6% respectively. Around the world, the IMF, the International Monetary Fund, they are forecasting that the growth will be pretty much the same. But having said that, the growth is actually happening in the backdrop of all these conflicts that we are seeing. The number of issues that we see, right from Israel, Palestine, Iran, Syria, Ukraine, and Russia, just spark up anytime. Recently, also there was a little bit of a event that happened. Sudan is another one. So all of that is happening, and of course, we all know that in the midst of this, Donald Trump has got elected for his second term. Incidentally, he's coming at a very interesting time where most of his adversaries, China, Russia, Iran, North Korea, they are all having some sort of a cooperation going on. So we have to see how that will all sort of come in the next year. See, all these things are necessary to know the impact that it will have in the coming year. Okay, so Trump just got re-elected. That's happened in November. The official term of the president begins in January, 20th January to be exact. So that will happen. In the last few months, while the whole world was sort of going down, we saw that there was a lot of money flowing into China. We spoke about that in the previous sessions. So Chinese markets were doing well. So maybe the financial institutions were selling in Indian markets. That's why Indian markets went down. And they were investing simultaneously in American markets as well as Chinese markets. So these kind of rotational things happen. Okay, what has happened closer home? Amongst other things, of course, the stock market had a fabulous year. There's nothing to complain about it, except that, the blue chips went up only about 9%. So the main Nifty and Sensex went up a very mediocre 9%, which means all the favorite stocks in your portfolios did really nothing. But on the other side, the small caps, the mid caps, they all went up in the range of between 25 to 40%. So that did fabulously well. Oil went up 20%, gold went up 30%, and silver went up 40%. That's very interesting. We had the Ram Mandir that happened earlier last year. A very significant thing that happened is, on the political side, is that BJP did not really get the majority it was expecting. And now, what happens with with that kind of an event is suddenly the confidence seems to get shaken, and we saw that the moment BJP did not get those 400 odd seats that they were expecting to get, we immediately saw there was a knee-jerk reaction in a lot of government companies, and the companies that and the funds that we had invested in actually started falling quite dramatically and really fast. So that was a little bit of a negative fallout that happened. But then I think the government got a little bit of confidence back when they won the Maharashtra election, right? So again, this is just recapping what is happening, because let's say June, July was a setback, but then October, November, with the Maharashtra election result coming in November, it was like a little bit of a positive stroke. And then maybe a combined effect of these two will start showing up in times to come. See, something very significant that is happening also to see the reason why the Indian markets were a little lukewarm, etc. I will talk about it again, but it's important to point it here. See, every year the government spends a certain amount of money. And if the government does not spend that money, then economic activity is not as fast as it should be. So the government itself is a very big spender of money, and that's what they call as the fiscal deficit. So in very simplistic terms, if they were supposed to have spent 100 rupees for the whole year, which is from April to March, they have just about spent 50% of that right now. And we are already at what, 9 months, isn't it? From April to December, and we are in January. So which means the other 50 odd percent is yet to be spent. Now, they have not spent it for a variety of reasons, and the most obvious one being the election. So when the election is happening, all the other projects and files and activities, or everything gets a little bit sidelined. So let us hope that the economic activity button is pushed by the government, and they start doing the spending. They have to spend their money, by the way. So it's not like a choice that, okay, is bar nahi spend kiya, so we will go in the next year and we'll spend. No. Whatever was committed, the projects that were committed, the fundings that were provisioned for, all that must happen. So I think we will see a spur in economic activity. Having said that, this was also one of the years where towards the end, we saw that the FIIs sold the highest ever. Even in the COVID times, they did not sell as much as they sold now. And at the end of the year, they were 3 lakh crores negative in terms of if they bought worth 100 rupees, they sold at the end of the year. By the time their selling total was 103, which means they were minus 3, which also means they took out 3 lakh crores out of the Indian market. But the domestic institutions put in a net of 5 lakh crores into the market, which means domestics bought 105 and sold 100, and the FIIs, sold for 103 and bought 100. So it's just pertinent to know that foreigners were exiting the Indian market, but Indian Indian investors and our monies actually credited or balanced that thing off. Something negative that happened in the budgets also was the STCG and the LTCG. Again, just to recount, these rates were hiked, and which nobody likes to pay higher taxes, but well, it's a part of our life. And advanced tax becomes that much more important for us. And then we saw some Hindenburg onslaught also happening again, this time on the SEBI chief, and they continued their saga, but that will go on. So this is the backdrop. Now, in this backdrop, how did the markets perform? Very important to sort of just understand it very quickly. If you can use your cursor to sort of point out on the Nifty or Sensex, whichever way you look at it, we prefer the Nifty. So we were at almost 21,700, say 22,000 round figure. But see where we ended the year. The year was ended at about 23,600. So which means it's a growth of about 8.82% or 9% only. Which means, again, that the best of the blue chips, the largest names that we know, really didn't do anything. I mean, they did go up by August. So the index was up to about 16%, but then it lost a good 8-9% again. And the year has given a very ordinary looking 8-9%. But on the other hand, look at the new emerging companies. Okay, the next 50 index, which is, I keep saying, right, that there are 5 main indices today in the Indian market. One is the Nifty, the other is the next Nifty, the third is the Bank Nifty, which talks about the banking sector. Then there is the mid cap index and small cap index. These are 5 independent indices which we must study to understand exactly what's happening. It's just not good enough to say that the Sensex or the Nifty is doing this and vis-a-vis that my portfolio is up or down. We have to understand what is our portfolio representing. If we are into a small cap portfolio, then you would see that the small cap, in the next slide, you will see that has actually gone up by as much as about 28%. Can you put the next slide? Yeah, it's there. You can see small cap started the year at 14,000 index and went up to about 17 and a half, almost 18,000. So small cap index actually did far better than the large blue chip. The same applies for mid cap. So now these indices did much better. So if our money was parked into mid caps more, small caps more, which has been the case, we made far better returns than, say, being in the top line Nifty stocks or the main blue chips that are there in most portfolios. Okay, so historically, now this is very interesting. I just thought it was important to sort of highlight here as to give a representation of what is actually happening in India. So if you see the first row there, which is Nifty 50, which are the blue chip stocks, and I just thought it was pertinent to talk about it in 5 years' time, from 2020 to 2025 today. These stocks have gone up 100%. 100% means basically they've doubled, which means they've given us a return of between 12 to 15% on an annual basis. Okay, and that is exactly what large caps are meant to do, what blue chips are meant to do. But in the same intervening period, the rest of the market has been so much better. So I actually only wanted to focus on that 5-year column. If you can sort of, just annotate or circle that. Yeah, okay. Yeah, Jhaveri is indicating that. So look at the disparity of returns. The small cap index is kind of more than double. So, if you had invested money in small cap for last 5 years, we would have probably tripled or quadrupled our money. The same applies to the mid cap area as well. So last 5 years were dedicated to this, and the logic is really very, very simple. What's happening is, and I'm going to, I'm so impatient to share this very, very interesting data with you, but I'll have to wait for that slide to come up. India is doing so well that today, if you are invested in the upper crust of India, the upper companies, the best 50 companies of India, you're not making so much of portfolio return as much as you are making in the lower companies. But then the lower companies are not, fly-by-night operators. They are doing some fabulous, fabulous business, very innovative business, new technology, new products, new services, and they are actually dominating the entire global space. There are so many examples of this, but that we will talk about later. But for now, it is important to know that the real talent of India is being exhibited, is being showcased by what is happening between company number 151 and company number, let's say, 800 or 900. So exclude the top 50, the top 100, but the real meat of the material is in the balance 900 of the top 1,000. Okay, so that's something that we must focus on, and that's something again we will show you. So this is all about 24, right? What happened, the history. Now let's sort of move forward and let's look at what the World Economic Forum and what the international economists, etc., are all talking. There is not much happening in this slide except that they are saying that India grew at about 7% last year in terms of the GDP growth. We'll probably grow at the same rate again. Why is this important? Why do we talk about GDP growth? See, GDP, for the ones who are hearing this for the first time, who don't even know, we all talk about GDP growth as if we all understand what that means. But see, on a very simplistic basis, if you're running a business and in your business, suppose you do an annual turnover of, say, 10 lakh rupees, then your turnover or your produce for the year or your turnover or your revenue, whatever you want to call it, is 10 lakhs. Okay, that's your sales. And out of that, of course, you've done some expenditure. Say you did an expenditure of 6 lakhs and therefore your profit was 4 lakhs for the year. That is typically how our individual balance sheet would appear if you are into some sort of a trade or business or some activity. Now, in the same fashion, the country, so whatever I have done, whatever you have done, whatever our neighbors have done, everybody's business incomes put together. So if you sort of add up all of that, that all the goods sold, all the services sold by all the companies in the country, everything totaled up. So everybody's revenue or everybody's sales getting totaled is the GDP or the gross domestic product produce of the country. That's what they call GDP. So when we say the GDP is X number or Y number, we are basically talking about sabka saath mein sales kitna hua, how much is the aggregate sales that everybody has done together, right? That's what it is. And then we talk about the growth of this GDP. That last year we were at 100, and next year we have gone to 106 or 107 or 108, which is a very respectable number. I mean, as you will see very soon, that even a 7-8% growth is massive, because we are talking of this growth on a number like 250 lakh crores. I mean, that's a lot of money. I mean, it's an insane amount of quantum that we're talking. So 8% or 9% growth, and that is phenomenal, right? So we'll see that. But now let's come back to the slide just to understand that. See, why is it important to understand? If the GDP is projected to go down, it's bad news. It's very, very bad news. That means there is an economic slowdown happening. All sorts of problems are happening. Government is unstable, and all the worst nightmares are coming true. But otherwise, the IMF at the moment is saying everything is good, everything is hunky-dory. India, as you can see, is the lower little diagram, the gray and the blue bars, that is India. And the upper one, they're talking about the global economy as an aggregate. They're talking about advanced economies, and they're also talking about developing economies will be slightly better than advanced economies. But all this data has to be taken with a pinch of salt, and I'll show you exactly. We just observed something amazing, okay? Come on, go to the next one. Look at this, okay? Don't worry about what's written here, okay? Go forward. Where are those pluses and minuses? Go back, please. Go back. Something not okay here. We had some plus and minuses here. Okay. Let me actually take you through what I mean here. Okay, if you can see, on the left-hand side of the window, what you see is the projection that was made last year. Okay, so and what we have circled there for you is India. The projection that was made by World Economic Outlook and IMF, etc., was 6.1 and 6.3. Can you just get your cursor there, please, so that everyone can see what we're talking about? Yeah. So in 22, they had actual data, and then they made a projection that in 23 and 24, India would grow by 6.1, 6.3. Okay. But what actually happened in reality, okay, can you just show where India is? So first show 23, just get your cursor to 23 of projections on the left-hand side. Okay, that was 6.1, as you can see. Okay, everyone, please make a note of this. The projection said 6.1, and the actual in 23 that happened on the right-hand side. And this data is reported by the same agency, the very same agency, the very same IMF, okay, the International Monetary Fund. They reported 8.2, which means we did far better than what the Western economists expected us to do. Okay. What I'm trying to say is that the Western economists are so conservative, and we actually caught one of their very interesting sort of method of analysis. So speaking of India, they said we will do 6.1, we landed doing 8.2. In 24, they said we will do 6.3, we landed up doing 7. It might sound like a small number, but when I said that this number is on a very large number like 200 lakh crores, 250 lakh crores, it is a phenomenal growth. Even a 0.5% change is a phenomenal change, you see. So my point is, they were so conservative about India, and we did so much better. Now comes the interesting part. You know, they were conservative about this entire emerging and developing economy pack. So everywhere they underestimated grossly. Take some example. Take, for example, of let's just say Brazil. Okay, let's come to Brazil. Brazil is 2.1 and 1.2. what for 23 and 24. And actually what Brazil ended up doing was 2.9 and 3. So for all the developing economies, they were extremely conservative. And might I use the word biased? Because for their advanced economies, for the more developed part of the world, the USA, the European area, uh, some of these specific countries like Germany, France, so they had overestimated. They thought that they are going to grow at a certain pace, but they actually did far worse. I mean, look at Euro area. They thought Euro was going to do 0.9 and 1.5. They landed doing half of that, 0.4 and 0.8. It is, I mean, dismal sort of growth. I mean, really something to be kind of worried about, and which I think the administration is worried about. Look, for example, at Italy. They thought that they will do 1.1 and 0.9, but it's actually done 0.7. So look at Spain. Spain is more or less in line. Let's look at, for example, Canada. Canada 1.7, 1.4, and they actually did 1.2, 1.3. The point I'm trying to make, this is very interesting. We just figured that when we rely too much on Western institutions and Western bodies and projection bodies, they are, let's obviously conclude that they are biased, because for the advanced economies, they are thinking that they will do better, but they turn out doing worse. So they are not reflecting the true picture there. And for the emerging world and the developing economies, they think that, oh, these guys are developing, so let's not run ahead of ourselves and let's give them a conservative estimate. But the truth is that the emerging economies are doing way, way better than what they have even imagined. So there is something here to know, that let's not sort of depend on these estimates a little too much. But good news is there that the developing world is doing much better, and India is obviously pretty much right at the top of the table. And even on the right hand side now, if you can come to the entire 25 column, it might be very tiny for you to read, but amongst this entire column, India's projection is at 6.5, which is the highest by far. And the second is at China. They are projecting China might grow at 4.5. Saudi Arabia at 4.6. So which in other words means is that we might have a very good financial and economic climate in India. Everything is going to be as good as it was in 2024, and it will only be better. So that's the conclusion that's coming out of this. We might grow at the same pace. Whether the stock market will grow or not is a different question, which we will see. But as a country, as an economy, everything is stable. Thankfully, we have the same government. There's no, I think this little debate that we were having around June or July of last year, saying that whether this government will continue, whether this coalition will work, I think that is established, that the coalition is going to be absolutely fine. We are not going to have a problem on the government front. They have some important states like Maharashtra, which is, BJP kind of BJP victory, and their BJP is running Maharashtra. So in that sense, everything is good. Politically, we are fine. Economically, we are already seeing that we are fine. Now let's move and dig a little deeper. Okay. Now we will come to see stock market data. What does the stock market data do? And now when we look at stock market, right, we look at two parts. One is we look at technical data, and one we look at fundamental data. So technical data is basically you're looking at the movement of the prices, and that of course is visible from the charts. So it gives you an idea of where everybody's thinking is converging or diverging. Okay, so as you can see, this is very interesting. I want you first focus on 2024, and now what you see here, for example, in mid caps, you see up dash D11. What that means is at the beginning of the year, the projection was that this sector of mid cap is going to go up. Okay, and it did happen that way, and it went down in the 11th month, which is November. That's basically what it means. In the same fashion, auto, for example, the beginning of the year, which is in January, we were thinking it's going to go up, but then it went down in the 10th month or in the last quarter of the calendar year. So this is how you sort of read this data. But as you can see, pretty much our judgment was quite accurate. So most of the sectors, we said everything is up, up, up. And pretty much the whole year it went up. with the exception of PSU banks, which started going down in the 6th month itself. And that's obviously because of the fact that the government did not get the seats in the majority that they were hoping. So the PSU banks, which were the darlings of the market, they actually got hammered quite a lot. But then, is there something wrong with the PSU banks? Absolutely not. Are their balance sheets okay? Absolutely intact and as good as they can get, and the growth is also there. We can see the growth. So there's nothing to worry in that space also. But this is just a report of technically what happened last year. Now, the reason I spoke about it is because then you can make sense of what is going to happen next year. But now this year, on technical grounds, is not looking all that great. Okay, the reason for that being, if you can see whether it's Nifty or Bank Nifty, see the trend is upwards. Okay, continuing from 2024, the trend is upwards. But for the last 6 months, Nifty, or that is our index, has been sideways. SW been sideways, and it's been sideways for the last 6 months. What sideways means is literally sideways. It's neither up, neither down, it's side, which means the market can't make up its mind whether it should go up or whether it should go down. So it's in a state of confusion. And I'll tell you what this state of confusion means. But for now, to understand, there are certain pockets which are up, there are certain pockets which are down, certain sectors which are looking downwards, certain sectors which are looking upwards. So it's like a mixed kind of a year. And there is no clear visible trend as we speak right now in January. But do not get disappointed seeing a lot of downs here, because what this is only trying to show is that the current trend is down, but that the down can change pretty soon. Now, the down does not take a long time to change. By averages, whenever the market shows a downtrend, and we are looking at a very long term, we are looking from a 5-year, 4-year, 5-year horizon, right? We are not traders. We're not looking from a 2 months, 3 months, or a 6-month period. We are looking for a longish period. So when we are looking at, say, between 2 years to 5 years, the trend is looking a little down right now. But whenever it goes down, and when our time frame is larger, it normally reverses between 6 to 12 months. So now, if you see that the Nifty was up but sideways for 6 months, that means it might go up and go down. So that is the problem with Nifty, which is the blue chips. But if for example, if the mid cap and the small caps, if they've been sideways and down, likely that they will move up. Then all these other pockets like auto, commodities, energy, they are all down. But down means they will spend a little bit of time downwards. It doesn't mean that they're going to go down another 20 or 30%. Everything's down already 10, 15% from October, November, December kind of point of view. It might hang around for a little longer, might go sideways and then turn around. So once it's down, it turns around, like I said, between 6 and in very rare cases about 12 to 18 months. But normally it comes back pretty soon. But this is only the technical reading, okay? Now let's move to something more important, and balance sheet. Now, again, this is like a lot of numbers, okay? But I'm going to make life like super simple for you. The first number I want you to just look at is 1472, is the total number of companies that were analyzed, okay? Now, let me just, so say 1500 companies, very simple, okay? Now, this is like really amazing stuff, and I'll show you why. Now, what you see on your screen is something called positive return. So the first column after the company is called positive return. Now, positive return on basis of what? The definition of positive return is, go down right at the bottom, the definition, QQP greater than 20. Now, what does that mean? Okay. What we have tried to do here is, we have tried to make a study of profitability. Okay. And we are looking at the last quarter profit. So quarter on quarter, has there been a profit, number one? And if yes, has that profit been at a certain level? So the best level would be a growth of profit, which is more than 20%. Fabulous, right? And then, of course, if growth of profit between 10 to 20% is mediocre. A 0 to 10% growth in profit is, of course, a very poor sort of a performance. So we are not interested so much in that. And if the profit has gone down, or if there's been a loss, we are definitely not interested into that zone, right? And therefore, we call that negative returns. So it's very simple. We have tried to see under 4 different parameters: greater than 20%, between 10 and 20%, 0 to 10% poor performance, and negative performance. And that's the basic formula. We are only looking at what? Profits. Because profits, why profits, for example? Because if the company is profitable, then the company share price will move up. So if you are holding that company directly, or if you are holding that company via a mutual fund, that portfolio, or that section, or that basket of stocks, or that sector of portfolio will move up in value. Very simple. That's why it is important to look at this kind of study to see where is the profit happening. Now, come back to the slide now. With this explanation, let's look at the slide again. Okay. So now here we're seeing, and what are we seeing here is that there were in the micro cap section, which is companies, and micro cap 1K to 5K basically means these are companies, not so chota companies, or not such small companies also. They're at least 1,000 crore companies, 1,000 to 5,000 crore company. In that bracket, out of the total 695 or the 700 companies in that space of 1,000 to 5,000 crores, there are almost 250 companies who have grown more than 20% in profits. That is phenomenal. Okay. So despite whatever you say, that is the kind of growth that we are seeing. The same way you see further in the small cap area between 5,000 to 30,000, 172 companies have grown more than 20%. And in the mid cap, we have 43 companies here. So in totality, if you see, we have close to about 470 odd companies, which is 43 plus 172 plus 250, about 470 companies who have grown more than 20%. Now, that's the good news. The not so good news is, look at number 6 on top. So your favorite companies, okay, the favorite companies that are there in most individual portfolios. Only 6 companies out of the top 50 companies of the country have grown by 20% in profit. And look at how many companies have actually had a negative growth. 30 companies there have had negative growths. So guess all the names that you have in your portfolio, if they are the best blue chips of the country, they've had a negative. But does that mean it's bad? No, it's not bad. It could mean cyclical. It could mean that the demand is not so high. It could also mean that it's an elephant. It's too large to have a growth of that quantum. It doesn't mean loss necessarily. It just means that if the profit in the previous quarter was, say, 17%, and this quarter if the profit is 15%, then it's a negative growth of profit. Basically, that's what it means. But you have a large chunk of the best companies doing negative. Okay. Now, on the other side, one might argue that even the small cap and the mid caps have a lot of companies there. You can see there are some 200 companies in small cap area which have done negative growth. There are some 300 companies in micro cap which have also done negative growth. But that is why we need a professional, to intervene and to help us navigate on which fund to buy and which sort of company to be invested in and which company should be exited at what point of time. So if you see, out of the 1,500 odd companies, I'm just making a round figure, that 1,472, I'm just making a round figure to 1,500. And I'm saying out of that 1,500, 484 companies as we speak today, based on the last quarter's performance, this data is as recent as yesterday's data, because this research was done yesterday, so to give you the latest numbers, okay, 484, say 500 companies are still very, very, very investable. So 30% of the market is investable because they are doing fabulous performance. Not to say that the other 70 is not investable. If you take mediocre returns, if you add the poor returns, then you still have more than 50% of the market which are investable companies. And again, please remember, we are talking of the top 1,500 companies only of the country. And we are talking of all the companies which are above 1,000 crores. We are not talking of any chotu company, any small company, okay? So out of the best companies above 1,000 crores, we're talking of that quantum of companies. More than 50% of the market is still investable. So now if I was to say, mix up the two facts together, then on the technical side, we are getting a lot of negativity and we are seeing that things are in a bit of a downtrend. But on the fundamental side, you are seeing that the profits are very well maintained, which is why there is force because there was FIIs who were selling a lot, and because of that selling inertia, everyone has got rattled. New money is not coming in, but domestic investors and domestic institutions did buy, but not in that force that we would have normally bought. So that's why you're seeing this confusion. That's why you're seeing the market is not doing anything. It's like a dead market, you know. Thoda upar jata hai, thoda niche, up, down, up, down. That is basically what it is doing. Confusion is the state of the market right now. So when will this confusion get resolved? Very, very soon. We are in the first week of January right now. This confusion will start getting resolved by the end of the month. Okay. And by the middle of February, it should be even clear. Why? Because the next quarterly results, the quarter that is just the third quarter of the financial year, which has just got over in December, will now start giving their data. So that data will all get completed in terms of their submissions by February 15th. So by Feb 15th, we'll do this research again to find out how many companies are profitable. And my guess is that we will find that the number of negative performers will reduce dramatically, and they will all sort of move into poor to mediocre to fabulous performance. And then I think the stock markets will also start, sort of triggering. So which means, in other words, this is a very good time, a very, very good time to sort of start building, start putting things together. And again, this is something we spoke about last year. Just summarizing this, there are three things that move stocks up, right? One is profitability, the other is order books, how many new orders the companies are getting, and government policy. So profits I already spoke of, right? Just take us to one slide before. Okay, just take us to the previous slide. So this is the slide I was talking about. So out of 1,400, say 1,500 companies, only about 600 of them are showing negative. They're not showing losses. They're saying negative growth. Okay, so the growth has not been positive. It's been negative growth. But we are still not interested. Still, there are 500 very good companies. So profitability is okay. Next. Order books. Can you just show some order books? I mean, there is a lot of order books, and we'll just show you some order books. This was last year, where we said that, by 2030, there is some $100 billion worth of order. There's some research done by some of the governmental agencies. But right now also, if you can just on Google, see, order book is a very simple thing. You can even type it in Google. We are doing exactly the same thing. But it is to show that order book means somebody is getting orders. The companies are getting orders. If they're getting orders, that means they will make sales. If they make sales, they'll make profits. Can you put that up? Can you share that? Okay, and while the order book thing is going to come up, then the third thing is the government policies. Very quickly, we'll just talk about it. In terms of government policies, the agenda generally has been the same. There has been no change in the agenda so far. The agenda that the government set out in this budget, in the last 5 years, or various budgets that we saw, is all, in terms of, let me bring housing to everybody, let me get fresh water to everybody, let us focus on renewable power, let's focus on renewable energy, so on and so forth. So all of that is continuing. Okay, so here is something, here is some article from Equity Master, which we found that, there are stocks which are even surpassing their market caps. So I'm talking about the order book, okay? And what about these other links that you had? So this is the Equity Master link. There's another link, I think if you click on that book 1, book 2 link, there are some other links which show you, I think it's a Dalal Street link. That will also show you a lot of orders that are happening. And that order is very reassuring. That means there's a lot of business happening. And companies are getting a lot of orders from consumers and also from business to business. But come back, it's okay. Let's go to the presentation. Then just to sort of do a little quick recap on the government policy side. Can you just show me that one? So what else is there? So there is renewable energy, there is housing, there is water, there is reservation for women. I mean, in terms of women's empowerment. So all those agenda are pretty much, the same that the way they were. What is very, very important for us and from our point of view is things like this affordable housing, because that's why we've been talking about a housing opportunities fund and things like that, which is a great idea because India needs housing. And if we have to house so many crores of people, then obviously all the housing related companies make fabulous amount of profits, and therefore they become a great investment. And the same thing happening not so rooftop solar is government's initiative, but it is a part of a larger initiative of renewable power, right? So we all need renewable power. We all know that we've barely reached about a third of what we need, which means there's a long way to go till 2030. So we still need, I mean, in solar itself, if I remember rightly, we need about something like 500 gigawatts of power. So all of that is happening as we sort of move along. Is there anything else? No, that's about it. So that brings us to like a little bit of a culmination of what we think in terms of opportunities 2025 in January. It's a little bit of confusion, but great time to sort of put all the money together. Great time to start the journey, start investing, put the money inside. Clarity will emerge within a month because the next quarter results will come, and that should be very good because profitability of Q1 and Q2 has been quite good. We already have a large universe of investable companies, and that will only grow. Okay, technically, whatever was supposed to go down, whatever was supposed to look negative is over. So therefore, we should be looking at a positive direction and a positive move coming forward. So all in all, right now, we might not see too much of action for Jan, Feb, maybe, but I think post-February, post-March, I think we will see a lot of activity happening. And in the new financial year, again, there will be a great amount of market gains. I would think, and I would want to project that we will probably actually see that even on the main blue chips and the large caps that we have, we might see a good 15 or 20% growth there. And if that were to happen, then obviously the smaller companies would grow better. So we will have an equally good year on the index, and funds would perform better. Individual stock portfolios would perform even better because they might be curated. PMSs will perform exceptionally well. So I think we should have a very, very good 25 also. Nothing, no major concern, no major worry or any area of doubt. There might be some hiccups. I mean, the government, as we can see from the last year's budget, is just absolutely hell-bent on generating more and more tax revenues. So we might get hit a little bit there, but that's part and parcel. We don't really need to worry about it, can't do anything about it because worrying is useless, it's futile. If the government says that we're going to charge you X amount of tax, they're going to do that and we have to pay that. So there's nothing that you can do there. But on the other side, we can think about where to invest and how to invest better and make better profits this year as well.